it's like I monetized $5 million off of 600 YouTube subscribers because I spoke exactly to my ideal client.
Mark Anderson, founding and managing partner of MBH Capital Management, from driving Uber and evolving into a self-made millionaire trader, going as far as to saying don't invest in your 401k is quite ballsy.
If you don't have kids and you're under 30, there's no reason you basically should be funding your 401k, and you should just be spending all of that on trying to get some skill. People are thinking of money from a scarcity perspective. And like just by investing in yourself, you're physiologically acting out and psychologically programming your mind that there is more money out there for you to buy. Like,
what is the most valuable lesson you've learned in trading?
I would encourage people to, if you want to improve in life, all the benefit will come from.
Mark, thanks for joining us today.
Yeah, glad to be here. Kind of a small world, so I'm happy to be on the podcast.
Love it. To kick us off, can you share a bit about your early experiences, something like transitioning from construction to trading, and how you shaped your philosophy on risk and opportunity?
Yeah, I mean, I went to college for construction management. It seemed very predictable and safe while we were in college. Everyone always got an internship. It was very in demand. San Francisco is also the most expensive construction market in the world, so it's rather lucrative. And it was like, as a 20-year-old, you'd make $30 an hour interning and make close to 100 grand graduating college. So like, perfect, I'm doing this. As I got into it, I just remember driving home my first day from work. You know, you're a young man and you're kind of on the bottom of the totem pole now. I was just like, this can't be it. So I was going to do something productive. And I started basically listening to motivational and self-help books and investing stuff. And then basically, as I started work, I was just like, this sucks. I chose being a field superintendent. So basically no one was around me and I could be unsupervised to do things. And I just continued doing that, had eventually found real estate. I was like, I'm going to buy apartment complexes in Austin, Texas, while saving a bunch of money and living below my needs in San Francisco. Did that. Life kind of hit me down with work and COVID and tenants, water heaters blowing up, you know, bed bugs and whatever, just a bunch of stuff out of my control. And I was always familiar with options, got really into Tony Robbins stuff, and life kind of forced me in my hand a little bit, and then just basically dedicated my life to trying to be the best at one thing and just plugging along with it and having a good time doing it.
There you go. So let me ask, what exactly led you towards Tony Robbins? I know we talked a bit about your inspiration for getting into options trading. I'd love to hear how you decided to take that leap.
Dude, I went with the sales team and we like drank the whole time the first time we went. Like, my buddy described it to me as self-development Coachella, and like, it is tight. You're like jumping up and down. There's like a bunch of beautiful women going around there. You're like dancing, you're walking on fire. So it's cool, but I realized there was kind of some stuff to it. And, you know, I'd realized that I don't want to call it self-sabotage, but I'd get kind of to the threshold of maybe entering into the unknown and progressing to the next level. And I had just kind of materially gotten really close and not quite done it. And then I had envisioned doing some stuff during the exercise to do with Tony Robbins. And then life kind of forced me to do it. And when I call it the hokey pokey, I had 1 foot in and 1 foot out of making a decision. And then when I actually got into it, I realized I was pretty prepared. And then I started going to more and more with my friends. And then while I was there, I was like, sold properties. This is like 2 years into Tony Robbins stuff and like trading. And I had made like, a couple $100 grand from real estate properties and was successfully trading. And I was working at SDR Drive making like 50 grand, 80 grand with OT. So it made no sense for me to work anymore. And I'd kind of realized there was like a pattern in my family that's like, my mom was a daddy's girl. They kind of had like a money thing with them. My dad had gone bankrupt in a business while I was growing up, which he never mentioned to me until I was like 25, and my mom brought it up. And there was kind of like a generational pattern of what I call like scarcity around money and opportunity. And I basically decided I was going to do that. And then even though I had a chill life and I was sitting on the boat making, 250 grand a year, I decided to basically drop like 130 grand on traveling the world with Tony Robbins and becoming a coach, as well as like dropping, 400 grand and starting a hedge fund and starting back at zero after I'd climbed out of being at zero several years before. And then not something I'd recommend, but that's basically how I got today. And when you make a decision for yourself and kind of break those patterns, like what I like to say is making money in business is recognizing patterns and optimizing them, but changing your life circumstance to creating something that's possible is all about breaking a pattern of what's been going on in your life that's basically a blockage. He kind of refers to it as basically it's your primary question. So there's some question of doubt that shaped you when you were emotionally immature in your life that you've screamed to yourself so loud and so clear that you don't even question it anymore. And uncovering that is the light switch that will kind of change things.
That's interesting. Talking a bit more about your family history and your early leap into getting out of the hokey pokey, getting into the world of options trading. Can you tell me a bit more about your early challenges and key lessons you might have learned while taking that leap and how some of those might have shaped your philosophy on risk?
I mean, I kind of backed myself into a corner, so there was no other way. Like I definitely believed that I could do it. I just had to prove it myself. But I was not concerned with the downside whatsoever. It's like I had already
All right.
been doing everything safe. And then it's like I got, I was building skyscrapers, and not that it's unfair, but it's like I was a loser in the COVID-19 thing. It's like I got laid off. I wasn't, you know, I didn't have any equity exposure. I had to live off my savings. I was unemployment. It was a blessing because I focused on investing in options. So I had already done everything right. I'd work nights, I'd work 70 hours a week. I was, one of the younger persons in my career path in, $1 billion company. And it didn't work out for me. Like I literally had to leave San Francisco because I was too broke. San Francisco was like, you aren't successful enough to leave. And so the downside was not of concern to me. And this is the thing where it's like, there's a difference when you act from ambition instead of fear, or when you act from greed instead of courage. So always focusing on the possibility and stacking the potential good that could occur rather than the bad. It's like, I had 100 grand and I was saying, I think there's something to this. I believe in it. I'm going to start a hedge fund, which is retarded to say,
Right.
but I was always focused on what the possibility was, not what the downside was. So that was basically, it sucked, but the most valuable thing that I think a lot of people don't focus on, and it'll be in everything's like, it's not your car, it's not the money you have, it's the fact that you proved to yourself that you went from 0 to 1, you went from broke, you made it before, and you were kind of like self-made, because like the government can't tax that and no one can take away your belief in yourself that you can do something like that.
That's inspiring for myself, and I'm sure for a lot of our listeners out there, following along your journey, seeing you finally crack some success. So tell me about that. Tell me about how you got into the 0 days per expiration trading. Tell me about how you cracked the code towards success and used it to build what you stand on with MBH Capital.
Oh, it's just all proximity. Like proximity is power. I got really lucky to be introduced to a systematic kind of way of testing data and trading, which would basically just mean you're doing the same thing every day that you have an expected value in, and you're just protecting that edge.
Okay.
So I had met other people, and then I could basically emulate other people, and I could stand on the shoulders of others. And just from the fact that people were open, and I, progressed in the fact of like being able to provide them value and just spend an insane amount of time of figuring it out. That was basically just the path in general. And kind of something that I would say is like when someone asks you for help, they're actually asking to help you, not the other way around, because there's always something you could basically learn in regards to that. So I was blessed to be in a good community. We all worked symbiotically. Again, I believed in it. The iteration was fast of learning because you get daily feedback. And then I always knew the future was like, this is the most scalable business on earth. Like it just goes, I even like to explain to people, it's like the business of a hedge fund is literally people pay me interest and equity on their money, which is kind of ridiculous. But
when you put it that way.
Yeah, I
Sounds
in turn
interesting.
create more value than other options, even when you're not paying for it. But essentially, that is the business of a hedge fund.
There you go. So tell me a bit more about how you do it. And in that, for some of our listeners out there, like even myself, before I met you, had no clue what 0 DTE was. So why don't you start off telling us about what 0 DTE is, how you formulated some of your strategies around that market, and how you've used that to build your success?
Yeah. So I'm going to try and make this super simple to best cater the audience. So please stop me or divert me if it's different. But zero DTE means days to expiration. So essentially, these are positions that are put on after 9:30 when the market opens, and then they're settled in cash at 4 p.m. in the afternoon. So you're in cash every day at 4 p.m. And essentially, since the market is open, if I was going to describe investments, the more illiquid an asset is, the more in excess return you should be compensated for it because it's not being price quoted. So by the market being opened, we can basically have a resting order to define our risk and manage our risk at a parameter anytime during the day. But the way that hedge funds or options probably differ from everything else is people will buy Tesla and they just assume Tesla is accurately priced. Like people are willing to buy it. It's a 90x sales multiple. It should grow. Elon's the GOAT. That's what people do. Now, in the options and volatility space, we're weird. We think that the underlying is mispriced, Tesla is mispriced, but the options are priced correctly. And
Okay.
that is essentially where we're trying to derive our edge. And when I like to describe edge, basically all edge is someone's ability to define the price or value of something accurately and then protecting against the risk of that. That is essentially all I'm doing is I'm just here saying the options are accurately priced and the underlying is not. I think I have a accurate price in here where I can make money from, and I'm going to protect the risk of that and let it compound at a fast rate, which obviously helps with 0 days expiration because they trade 252 days a year. So the last thing I would compare, if anyone's ever been in credit card debt, I sure know I have, that is interest that is compounded daily. Whereas if you have a mortgage or a personal loan or something, that is interest that is compounded on an annual basis. So I am basically trying to compound wealth like a credit card through the avenue that I'm doing, where your Tesla stock, your index stock, your company stock options are compounding yearly.
That's a great explanation. I did my deep dive on zero DTE before meeting you, and feels good to have an industry expert lead us through exactly how he sees it. So, AI, we want to know how you have used new technology, how you've utilized emerging trends in automation to really capitalize on what you're doing. In our previous talk, you've spoken about how you can work 0 hours in a day and you'll be making money. For our listeners, the term Mark used was shitting cash, which it sounds pretty appropriate given that his website advertises a 40% annual return on investment with a maximum of a 10% drawdown. That's impressive, Mark. Tell us how you do it without giving away too many secrets. What AI are you using? What automations? And how are you utilizing the new technology of the world to streamline your processes?
Yeah, so I kind of have two different views on AI, and as the rational volatility selling, non-sentiment driven thing.
Let's get
Um,
into it. We
you
got
know,
we
I
got time.
yeah, so I kind of view myself as like a cash shitting dinosaur of a business. So the best way I would describe AI is it's like in 1970 the microwave came out and people said we're never going to have to cook again, we can cook everything in here, steak, like this is amazing, which changed the world. And that clearly wasn't the case. And then like in 2012 the air fryer came out and you could actually cook everything better and in the air fryer. And I kind of think this is where we're at in the AI hype cycle, and a lot of people are trying to monetize quantum computing and generative AI, which is so far down the future. And not enough people are focusing on basically how the AI current technology can best service people like in a year. Because we're just assuming, Moore's law, microchips, whatever, go indefinitely. So, in regards to like, you know, can I use some AI voice in recording? Can I use it to correct my grammar? Can I ask ChatGPT stuff? Sure, I use that rather extensively. But at its core, like the input of AI is quality data and assumptions, which clearly cannot even remotely be made by AI for most, you know, retail-ish iterations.
Right.
So definitely something that I think improves, people's ability to do things and stuff. But I also think in the, Silicon Valley hype machine of reinventing the next thing, it's like it was the gig economy and then it was this and then it's that. That is predominantly what it is, because it's like, what I think of as basically AI that is amazing, like an ERP that like manages workflow and everything. It's like they came up with that stuff in like, the 1990s, and it's worked perfectly. It's like, how does Walmart know what to get on their shelves in perfect timing, like stacked
Right.
perfectly? And it's like, I find that amazing. But yeah, AI in general, I think is quite a bit of a hype machine. And the other thing that I'll give is like, it has to be economically viable, which I think a lot of people are underpinning, because even all this AI innovation is basically bought on credit from VC debt. And then NVIDIA is letting them buy GPUs on more credit, and their data centers on more credit. So for example, the Concorde in the 1960s, they figured out supersonic flight from London to New York. And economically, it's just a magnitude of prime more inefficient than just flying a jetliner at like 600 miles an hour. And, 50 years later, we're not flying on Concords. So that is a massive leap that we need to get over for use cases and certain things of what that basically looks like. And this happened in 2000 and whatever. So I definitely look at it and monitor it, but I'm a much more rational person. Like how I recommend people look at AI is like, set your guardrails of what you're focused on and how you add the most value. And then when it comes in between those guardrails, like pay attention and be curious.
That's a refreshing perspective, Mark. I appreciate you sharing. And this is a standpoint I've got obviously quite a bit of experience and foresight
It's
into as
basically what you
well.
guys are trying to do, like on a small scale, like
Absolutely.
small businesses bring this. Yeah.
Even back to my experience at BlackRock, the AI hype cycle it's something we talked about in my orientation. And as you mentioned, it's very, very similar to the web, that like the .com era,
Yeah.
the web 1.0 hype cycle where everything blew up. And over the next 20 years, we see a slow and steady integration of how it's taken over the world today. But web 1.0 has taken over the world as we know it. And you mentioned Moore's law. Right as AI was making its biggest waves in late 2016, early 2017, Moore's law actually broke. We stopped being able to double the amount of transistors every other year. So we'll have to see how that goes. As you mentioned, NVIDIA is dropping record-breaking earnings reports every single quarter nowadays, but we will have to see how it goes. On the integration side of things, there is a lot of efficiency. Generative AI is revolutionary in its own right, but AI as a whole, it's not the alien we all make it out to be. It's not going to change the world. It's definitely going to speed things up, but we'll just have to wait and see how that goes and changes things. I'm curious to hear a little bit more about how you have, if not used AI, used automations to streamline some of your day-to-day processes, especially in the world of options trading. I'm sure that a lot of our listeners will have some curiosity into how you have optimized your day-to-day life, trading what you say is between 150 and 200 options per day. But you got time to hop on calls like this. Tell us how you do it.
Yeah. So as we're speaking right now, I probably have like 150 grand in premium in the market. So we're currently working as this is occurring. But
I love it.
I think the main trend with that is just the democratization of information and technology has like plummeted down. So there are much less barriers to entry, and there are basically the massive reward for disruptors. So the innovation that could come from individuals that are working for themselves or for a place with passion is massive. So the data I use now that you could subscribe to for like $50 a month probably would have costed 100 times more than that, maybe 1,000 times more 10 years ago. So that was kind of what sparked the revolution with that occurring, that just all that could be automated, subscribed, and much cheaper. But yeah, I'm using it's an API plugin that basically sends orders to the broker based on certain parameters. So it's not the craziest technology. It's more kind of how I balance that portfolio. But with that, everyone likes to talk about what information, what technology, what this is. And this kind of goes back to the hype cycle. And all capital or money or competition that exceeds in the marketplace comes from basically some type of inefficiency that they find an edge in. And there's 4 types of edges. There's informational edge, analytical edge, executional edge, and behavioral edge. Basically, analytical would be finding some type of data or your ability to analyze that data to get an edge. Then there's information, which would be like you have access to special information or you're able to derive that from your analysis. Then there's executional edge, which is your ability to run an ad, send something forward, all of this. And I feel like everyone tries to look at those and they're just constantly chasing the silver bullet and they're fooling themselves by randomness and having some type of cognitive bias or recency bias that justifies that. Because I think most of that is only accessed by the massive funds or massive businesses. Like executional edge, the easy executional edge is like you either work for the government or you get so big that you have operational efficiencies. Like informational edge, like there's not that much out of there unless you're like have some type of inside source, but you can derive confidence in your information that you analyze, your analytical. And then there's behavioral edge, which is just your ability as a human to basically act from courage, act from service, act from ambition, not greed, not fear, not scarcity. And that is essentially what I'm trying to do is I am just trying to optimize my behavioral edge of focusing on what's important, setting up my day on a day-to-day basis to not make mistakes and check stuff daily to hold myself accountable. If you're trying to lose weight and you weigh yourself once a month, you'd be screwed. But if you step on the scale every day, you basically know where you are in the iteration. So I am really trying to just not screw up on all that other stuff, making sure that I'm just preserving the best practices that are currently out there. And then I'm just trying to derive all my edge from behavioral skills that best suit the execution to just make money.
All right, let me test you with a what if here just for a second. I appreciate you expanding on the 4 edges that you see in the market, but touching specifically on behavioral edge. A lot of experts out there in relation to the AI hype cycle have said that AI is going to take over a lot of jobs, from AI dental receptionists to hotel concierge services that can speak every language in the world. That human touch is important. And especially as you and I are face to face on a call, we're seeing AI sales reps out there and they're getting a lot of backlash in the market. Some of the leading psychologists who are in the AI space tend to believe that AI is going to take over a lot of stuff. And then as the cycle calms down, we're going to see humans get put into a lot of those human facing roles. Touching on behavioral edge, you mentioned that your ability to do the same thing every day, to make decisions that are right for yourself while using your own judgment. How might AI, and here's where the what if is, what if AI were able to do that better than you? What if AI were able to do your job, do the 0 DTE trading better than you? Have fun with me here.
I'm ready for the arms race. I'm going down kicking and screaming, but I was able to beta test kind of a Tony Robbins AI where they like programmed his principles and it remembers all your past conversations and it doesn't basically give out like rudimentary scripts, and it's quite amazing. Like,
how much can you tell us about that?
I can tell you as much as you want to do. It's like you type in a prompt and it's like spot on. It sounds like I've done thousands of hours at these conferences. It sounds like spot on to what he's doing. He can't quite like pick up, if you had some conflict with your mom, unless you like bring it up in your early childhood, or like, the AI can't read your body language. But for very niche down use cases, I definitely, think that AI has a possibility of doing that and showing it. And who knows, maybe it past humans. I think we're kind of further from that, but I think it probably looks like more of an arms race where it's not going to be humans versus AI. It's going to be humans that are probably okay with integrating AI more into their actual, I don't know if I want to call it psyche, but like I said, that is probably pretty far away of what that is. But I don't know. Watch the movie Gattaca. I don't know if you've seen it.
I haven't. What's it called?
Gattaca. It's basically about they figure out like gene theory. We could probably do it today, but everyone starts breeding like Giga Chad kids, like the perfect gene height build. And then there's a few people that like aren't Giga Chads. And obviously it's a movie, but at the end they're like swimming in the ocean and the Giga Chad perfect genes turns back. But the human was like irrational and dumb enough to keep trying and like would be willing to die and not preserve themselves, and they ended up prevailing. So yeah, it'll probably eventually happen and break. The speed of it's going to be massive. I don't know when it is, if it's our lifetime, if it's 2 years, if it's 5 years, but trends never change with what's going on. It's like we went to the moon, crazy, like the Industrial Revolution, crazy, like trains. Like think about how much the world changed between 1900 and 1910, and then like World War I and World War II. I'm much more worried about like AI gets to a point and there's going to be a human that decides if it changes. It's like there's several instances during the Cold War where like Russians got like a false alarm that the US had launched a nuke and the person on the other side decided not to launch it. So I'm much more worried about that potential breaking point of decision if we can trust on humankind making a good decision to not compromise that. Because like Chernobyl, the example was basically like people did not step up and they did not speak up and it ended up blowing and they could have prevented it. So there's instances both ways, but that's what I would be most worried about is at that tipping point, do people act humanitarily to do something and what that looks like? And then there'll probably be some type of war. Like governments are going to threaten our humanity before AI takes their jobs, with them like picking it up for sure. So that's like, I'm much more worried about that.
That's a great standpoint. And just touching a little bit more on the topic of AI and decision making. The Cold War reference, incredible. And AI probably would have launched those nukes back at the US. And that is a moment that changed the entire course of humanity. Breaking down to something that's also extremely high leverage, while maybe human lives aren't necessarily at risk, is managing massive investment portfolios. You mentioned having humans who have integrated AI, humans who use AI, would be making those decisions over humans who don't use AI. Reminds me of a quote by the economist Richard Baldwin back in 2023 said, AI won't take your job. It's somebody using AI that will take your job. And I do tend to feel that that's much more the direction that we are moving towards as a society. Getting a little bit more into the hedge fund industry in general, back to the old money side of things. I'm wondering, can you tell me a bit about how MBH Capital stands out in the market? What are you guys' unique value propositions? You've mentioned in previous conversations that it's not $1 billion industry. You have your niche and you specialize in that niche. Tell me a bit about how you guys are able to do that.
Yeah. So I'm predominantly driving my edge from behavioral edge. Again, I think you'd be shocked that most people's investment flaws from that. I do have a pretty exceptional, like executional side, informational and analytical side that definitely outcompetes most of the marketplace, but I'm not near as advanced as billion or $1 trillion funds. It's basically, how I utilize that. But predominantly, I am a boutique hedge fund. So I like to say I am a Tractor Supply company in a town that's too small for Walmart. So I'm not trying to compete with some massive whatever. I'm not trying to do X, Y, and Z. And this is kind of like it's a very interesting value prop for people that just aligns myself with them full heartedly. It's like, I'll always be 20% of the fund at least. I've had over 100% of my net worth in this for an extended period of time. And like I went from 0 to 1 and it's extremely scalable with essentially infinite, like the same fixed costs indefinitely. So I'm just solely chipping away at that. And I think it's a great diversifier of uncorrelation compared to other people, just from the two fact that the market's only open 20% of all hours in a week. So you can already tell that that's like a strong uncorrelation to everything else. And then also in regards to the whole, I'm saying underlying's mispriced and vol's mispriced. So it's a great diversifier and it's counter-cyclical. When volatility and risk premium goes up, that means everything else is going down. The market goes down, volatility, risk premium goes up. That's what I profit off of. So most people are triple long. You're long in your job, assuming you're going to get promotions, bonuses, and your stock options are going to pay off. You're long in your investment portfolio that you have the highest new stocks, you own a bunch of Bitcoin, you keep on taking bigger and bigger risk, and you're probably long in real estate with some house you overpaid and that value's, over exemplified because everyone else in that area is doing the same thing. So if that turns, you're 5-to-1 leveraged on your house, you could lose 30% of your investment portfolio and you could lose your job, which is 100% of your income. The value of having capital when other people don't is absolutely ludicrous, but you need the behavior to not even act that decisively, but recognize that's what you're kind of working towards. And that is essentially like what I am doing. And then the compounding, like a credit card, there's a bunch of other diversifiers, but this is a relatively young market and I'm a little bit of an early adopter into it. And then I'm into the math and quantitative side. You can watch more videos or read more articles on that. I'm not going to get into that for the scope of these viewers, but knowing who you are and knowing basically what your superpower is, and then knowing exactly who your ideal client is and speaking to them is the core of, again, what that edge is and extracting it. And I'll say this not to show off because it surprises me, but it's like I monetized $5 million off of 600 YouTube subscribers because I spoke exactly to my ideal client. And in the day and age where everyone's getting likes by bots and trying to be the next hype and they're chasing investment instead of cash flow, there is a rather lucrative path for people that are trying to go counter whatever the trend is. It just is a little bit different route. So I would encourage people to think differently, drink deeper from other sources, and question what they're doing, why they're doing it, and if they even want to.
I appreciate that, Mark. That's a great deep dive into how you guys operate at MBH. It's a great dive into who you are as a person and how you operate. For our listeners interested, we will link Mark's YouTube channel at the end of the video. I know I personally got lost into some of his backtesting videos over the weekend, but I'd like to continue on just talking about some of our discussion on trading. I'm curious just to hear some of your standpoints on institutional versus retail trading and where you see yourself along that spectrum.
So they define retail trading as people that trade under 10 lots, which would be 10 contracts of an option. So
Okay.
technically, in statistics, I would not be considered a retail trader. However, that is basically how I came up. And like I said, the way I'm deriving my strategy is something that is not what institutions would want to do. But predominantly, retail people are kind of the patsy in the poker circle of the financial games, and they are risking on most things. However, there's a lot of niches to basically be exploited. So like, not saying that people can do it, but I think most people are much better certified taking 100-to-1 bet in their career or spending on some self-development. And I actually wouldn't even consider myself kind of a trader. I am an entrepreneur that partakes in business. I just so happen to be trading. Like if I just wanted to trade, I would go work for a prop firm or get a W-2 job. Definitely make more money right now, but I want that infinite upside. So even though I'm this trader and doing stuff, I wouldn't consider myself an institution or anything. And I think that, as boring as it sounds, like investing in index funds, saving up a rainy day bucket, and then investing in yourself for a skill is much better off like where you should be, especially if you're young. Like if you're like don't have kids and you're under 30, there's no reason you basically like should be funding your 401k, and you should just be spending all of that on trying to get some skill or taking risk if that's what you want to do. Like funding your 401k for the potential return versus what you could learn. It's like there's millions of stories out there of people that returned 10,000 to 1 in learning business or taking a chance. And there's very few people that do that in Bitcoin. And I could talk mathematically about all the problems with picking an individual stock or doing whatever. But yeah.
So as a successful investor, I'm sure a lot of our listeners are looking up to you. I want to touch a little bit more on your investing philosophy. For our listeners, Mark has clearly thrown out the traditional 60-40 portfolio, and going as far as to saying don't invest in your 401k is quite ballsy. I agree. You should be investing in yourself first and foremost as someone in your 20s without kids. But let's hear some investing advice for most of our viewers will be under 30 years old. Most of them are probably investing an awful lot into their 401k. Can you tell us a bit about how investing yourself has paid off over the course of your career and whether or not you would specifically recommend withdrawing your contributions from your retirement accounts?
Yeah. So, like, there is an asymmetric risk to reward, is essentially what you're always trying to look for in investing. So, the asymmetric risk to reward of like lowering your tax burden slightly and investing in your 401k early is basically that if you never amount to being a very high earner 40 years down the road after working, you should be able to relatively comfortably retire, assuming the government doesn't change the tax law. And for information, the reason the government does offer you a 401k is because they know you're going to have more money later that they can tax you more on, that they could change that tax law. And, not to be political, but mathematically, if you were to tax the top earners 25%, which is, probably less than most pay, but that's kind of reasonable, they need a 50% return to get back to that amount of money. Whereas if you were to tax those people 50%, they need 100% return to get back to the money. So if you were to tax the highest earners, the people that pay the most taxes at 50%, basically a year later, it would drastically affect your entire tax revenue. So, we don't know what that's going to look like in the future. It doesn't really provide you optionality because you have to pay a penalty on it if you withdraw it. Whereas if you're 22 and you do something and you figure it out, you decide to move to New York City because even if you fail, the competition's so much more and the job environment's so much better. It may not look like you have 70 grand in your 401k, but did you get 70 grand of experience or an ability to make 70 grand more over the course of your life? So I'm not necessarily saying that like people need to start their own business or do whatever, but it's like just going to New York City instead of buying like a car or any of that is gonna like drastically progress your ability to make money and learn and do stuff in the future. So just stuff as much as that. Or it's even like, how valuable would it be for you to take your family on a vacation? You know what I'm saying? It's like you moved out of your parents' place and your parents are in their 60s. Like you maybe have 10 good years left with them and you spend 20 days a year with them. So
Right.
like people are thinking of money from a scarcity perspective, and like just by investing in yourself, you're physiologically acting out and psychologically programming your mind that there is more money out there for you to buy. Like newsflash, they're printing like, I don't even know what the statistic is. It's ludicrous. I think we have like a $3 trillion deficit. So like, there's billions of dollars going in the economy. It's like, you don't think you get a million of that? You know what I'm saying? And it's like that mindset is really valuable. And again, this is not advice for someone that wants to just chip away and is like loves their job and do it and they want to like
Absolutely.
ramp. But if you're like younger, or even if you have kids and your partner's on board, it's like, what better way to find out if you have like a partner for life? If you're like, hey honey, I want to risk it all and do this shit, and they're like, go for it. It's like, that's way more valuable than having 120 grand in your 401k. And it's like, what happens when an employee rips you off and you drop 60 grand on it that you wasted? You have a lot less expectations on what you're required to get back in life, whether that be from your partner or your parents or a stranger on the street. So it's like, even though you got ripped off for $60, your psychology's changed that like you don't expect as much back from your partner, which obviously builds a better relationship. So that's kind of a different mindset than probably most people. And, I'm sure some people out there are probably like, oh, look at this guy, he's got a bunch of money. It's like, dude, like 2 years ago, I had to lie to my parents that I had enough money and I had to drive Uber to buy like a $5,000 2013 Mazda CX-9 that like squeaked. And, when I was going on dates, I would never drive it because it was that shitty, So like,
Right.
I was not far from this, in what I was doing either. It's like, I know what it's like to be broke. It's not that bad, especially when you're young. It's chill.
Absolutely. It gives you a motivation. That's something that I can relate to you on. And thank you for the clarifications there. We will not be titling this episode Throw Out Your 401k.
Yeah.
Invest in your retirement, but invest in yourself first and foremost, because why not go figure it out?
Yeah. You should put in the match. It's free. I will say that.
Absolutely.
You should do that, but that should kind of be the extent of it.
100%.
Yeah.
I'm with you there. So getting a little bit into a bit more of our fun segment of the episode, I've got some rapid fire questions for you, a bit of a lightning round if you're up for that.
Yeah, let's hear them.
All right. If you could have dinner with any historical figure, who would it be?
I mean, I'd kind of be interested in Elon now. I think he's just the
Okay.
ultimate like talent of removing like enterprise level countries and enterprise level operations and just bloat. And I also think he's probably one of the most intelligent people. So I'd like to sit down with him, actually, or Tony Robbins. But I've been close to that already.
That's a good one. Give me a longer ago historical figure.
Jesus, dude, Jesus.
Dude,
Yeah,
that's
yeah.
one of the best I've ever heard. No explanation needed for that. What's a book or resource every entrepreneur should read?
I mean, Cash Flow Quadrant actually really kind of sparked my journey from Robert Kiyosaki, where he just kind of describes there's earned income, like job income, business income, and investment income. And that should be like, am I getting it from everything? So I think it's important to understand what that is. But I would say actually just go to Tony Robbins conference.
Okay. Go to
Yeah.
Tony Robbins. I love that one. Little fun one here. What's your guilty pleasure when you're not working?
So about that. I'm cool too. I
No worries.
hell like candy and Diet Coke.
Candy and Diet Coke.
Yeah.
Mark
I
Anderson,
really
ladies
like
and
candy
gentlemen.
and Diet Coke.
I love it. I love it. All right. What's one piece of financial advice? I'm excited for this one that you think is overrated.
I really don't like projections out like 30 years in the future when it's like if you put $200 in this and then it just gets like extrapolated out forever in the future. It's just like there's the further out you go in time, the less certainty you have with what that result is going to be, and the more you're like susceptible to that. So it'd be like plan long term, but like think in a much shorter time frame of when you require a benefit.
I love that. Think big, see small.
Yeah.
All right. Last one here. What is the most valuable lesson you've learned in trading?
Your biggest drawdown is always in front of you. And that compounding, like that's really where your edge is. And in a zero sum game, you can actually create edge mathematically just through compounding and limiting drawdowns.
I love it. All right. Well, thank you for answering our lightning round questions. I'd like to touch a bit more on Mark Anderson, the human, for our last 10, 15 minutes here. I'd like to hear a bit about your philanthropy side. We've talked in our previous discussions, it's a key value of yours to give 10 cents of every dollar to charity. Even when you were broke, you mentioned doing this. Can you tell me about some of the charities you've worked with? Any free shout out you'd like to give here today?
Yeah. So just in general, I think it again kind of interrupts the scarcity and improves all quality of your life. I think, I don't know who said it, but someone had a quote. It's like, I never met a man that tithed 10% of his income for a decade and didn't become rich. And that like both sense spiritually and financially. But I'm really passionate about child sex trafficking. I think that that is something that really gets swept under the rug because it's like dirty and no one wants to talk about it. And it's kind of amazing how little money can basically help and save people. And it's actually like an economics problem. The largest sex trafficking places on earth are basically where there's a boom for labor for men. So like Guyana, which has had a big oil boom, is like a hotbed for sex trafficking because there's a bunch of working men with money that, you know, don't have that much time or women.
Right.
So I like knowing some Tony Robbins named, it's called Marisi. They do a great job of like rehabilitating everyone and doing that. So I work with that. And then also I do volunteer and coach for like the youth events for Tony Robbins as well. So I also think it's important to like donate 10% of your income to strangers, like treat your family or people that you love with a portion of your tithing. That is also it. Like have fun with it that you could do. And then you should also tithe some time because it's really unique when you're coaching or helping someone and have no interest in getting a benefit from yourself and just being kind of an example for someone as well.
Being an example is a benefit to a lot of us out
Yeah.
here, but we appreciate your elaboration into your philanthropic efforts in life. We will link Marisi in the show notes for this episode for anyone who would like to go contribute. But I'd like to ask, as a busy guy, you fully operate your own hedge fund with a substantial amount of pressure on your back on a daily basis. How do you go about your work-life balance?
So this is the other thing. I actually really disagree with that. So when I first started trading, I wasn't stressed at all. And then when I started telling people I ran a hedge fund, everyone used to say, "Oh my God, that's so stressful. How do you do it?" And then I started agreeing with people like, yeah, it is. And it kind of made me feel self-important. And you know what started happening when you start telling yourself that lie over and over again? I started getting really stressed. So
Okay.
be careful of how you're programming it. But yeah, I just have behavioral edge. I know I have an edge. I know my sizing is responsible. Like I talked about the alpha, it's like the only situation I can blow up is if the exchange shuts down, which has never really happened except during 9/11, but that still wasn't during market hours. So I'm just sitting there mashing the probability button and then managing my mental state basically around that. So I actually don't think it's very stressful because I'm an expert. It's like, a doctor doing open heart surgery. I would think that's stressful, but that guy's done it so much, he probably doesn't even blink an eye. He like listens to a podcast while he's doing it probably.
There you go.
Yeah.
Maybe I have a vision of someone performing open heart surgery listening to us talk about this.
Yeah.
Talking about him. You've talked a lot about how it's important that you remove emotion from your trades, from your work. Can you tell me a little bit more about some of your reflections on overcoming self-doubt and how you've gone about removing your emotions from your work?
Yeah. So I also don't agree with that. Like I definitely have emotions and I pay attention to them, but the way to think of it is like uncertainty about your risk or what you're doing leads to negative emotions. Negative emotions create emotional decisions. Whereas if you have certainty of what you're doing, you get an emotional response. You realize that you have to look into something and then you don't make emotional decisions around that. That is essentially more of the feedback loop that I would do because humans have emotions and that's like a powerful barometer for us to be able to do things. So we all do need to do that. But certain things like the world's programming you similar to what we just talked about with the stress thing. So like my computer's on grayscale. I don't like the red and green casino. Like that UI is developed to make you feel fight or flight, which I want to avoid. So there's like small hacks and stuff that I do on that, but it's mainly like standing guard at the wall of your mind and deciding, you're going to stack the good and program yourself on what you're going to do in lieu of let the overall market or other people do that for you. And then just pay attention to your emotions and realize, you're not getting negative emotions and making emotional decisions, but rather the opposite, to be curious of those. And the example I like to give of that is the only game you're guaranteed in life is your C game. And that is to the level of your preparation and your emotional response. So if you want to improve in life, all of the benefit will come from improving your C game. And it's like, if you even look at homeless people, they're actually pretty normal most of the time, but their C game is just like wildly volatile of like them being super crazy or like doing crazy stuff. But it's like homeless people, 70% of the time are actually like relatively normal. It's just when they get on their C game, they're bonkers.
There you go.
Yeah,
Watch out for the C game, folks.
exactly.
Closing off a little bit here, I'd like to hear your take on some advice for any aspiring traders and entrepreneurs out there. We've touched on a lot so far, but any closing remarks that you would give to our listeners?
For an aspiring trader or entrepreneur, it'd be like, be anyone your work, like find someone that's done it before or solved it. Like you have to really believe that there's opportunity in what you're doing, so be in the right boat. But when you're doing whatever that is that you believe in, like make sure that who is ever helping you or who you're working with or who you're servicing customers in, it makes sense what that value prop is and what that transition is, because people are acting in their best behavior. You obviously want win-wins in regards to that, but any system that doesn't add value to everyone in the chain will eventually probably fail and not be that good of a business.
That's great advice. Can you tell me what's next for MBH Capital? What should we watch out for?
Dude, I'm just, well, I like to say I have it in my phone screen. I'm just execute. Don't be cute, just execute. So I've basically got a money machine. I'm just looking for a larger lever arm to spin that money machine faster and more. And I think we talked about this last time, but in a business, there's different stages. So it's like as a baby in a business, you just eat cash and shit cash. As a toddler, you eat cash and shit cash, but you can also spoil boiling water on yourself. Then as a teenager, you think you're invincible, your cash flow is shooting up, you think you can't screw up. And then a young adult decides what they will no longer put up with and not put up with, and really starts to develop into that next phase, which is like prime, when everything's firing on cylinder and when you have your most flexibility and strength. So I'm kind of transitioning into that young adult phase. And then once the fund gets bigger and there's an output, I kind of have aspirations of starting a fund that just eliminates taxes for people, basically, through other assets that have very favorable tax laws.
There you go. That was a great discussion on the eat cash, shit cash is your baby. What stage would you say you're in right now at MB?
I'm transitioning out of teenager, hokey pokey between teenager and young adult. There's probably a few more phases that of my business that I could, step up to teenager or young adult or prime, but predominantly across most of the chain, I am still a teenager.
Well, best of luck figuring it out.
Yeah.
For our listeners who I'm sure are interested, how can they best follow along your work? We will link your LinkedIn and YouTube in the comments, but is there any other way they can follow along?
Yeah, LinkedIn, YouTube's the best. I write like a little newsletter that I take some time to do every month that you can subscribe to on my website. But just in general, follow along. I like to do one-to-many stuff. I'll basically respond to most everyone within reason. But I do put a lot of time into stuff that I put out there. It may not make any sense to you, but again, I'm kind of speaking more to one niche of people. I am trying to divide my message between like people that are a little bit newer and then people that are more higher level, like professionals. So I am trying to have both out there to benefit as many people as I can.
I love it. Do you have any final message for our audience?
Take a chance, do whatever that is. And it's just not a big deal. What I like to tell everyone is it's just like, dude, you can do anything in 9 months. It's like if God planned you being able to have a baby and do it in 9 months, it's like everyone on earth has done something that they thought was impossible and came to that in 9 months. And that's why we're here. So like you can do it too. Just take that mindset to it as well.
I love it. Don't be cute, just execute. Mark, thank you so much for joining us today and sharing your incredible journey, from construction sites to managing a hedge fund and everything in between. Your insights into zero DTE trading, the power of compounding knowledge, and managing risk have given us a fresh perspective on what it takes to succeed in this space. We've covered so much today: how to find your edge in trading, what it means to truly manage risk, and even a glimpse into your life outside of the charts and your philanthropic work and focus on self-development. Your story is proof that bold risks paired with disciplined strategies can lead to remarkable success. For those listening, if you're inspired by Mark's story or curious to learn more, be sure to check out his work at MBH Capital Management and his content online. And as always, thank you for tuning in to Old Money and New Tech, where tradition meets innovation. Until next time, stay curious and keep building.